I'm going to switch off the video.
Yes, please switch off yours.
Greetings to everyone, and welcome to today's webinar on independent review. My name is Simon Fenyane, and I'll be the facilitator of the program today. I'm from Corporate Education and Voluntary Compliance of CIPC, Companies and Intellectual Property Commission. And I'm not alone today. I'm joined by Mr. Benjamin Sibuza and Tigatole Mulaudzi, who will take us through the presentation today. We hope today's webinar will be thought-provoking and that each of our participants gain new knowledge. And again, today's webinar will be recorded and will be made available on CIPC website under webinars and CIPC Facebook. You are welcome to post questions during the presentation on the chat function, and then we'll make sure that we attend to the questions as soon as possible. Before I hand over to Mr. Mulaudzi, I will quickly go to the introduction. CIPC was brought into existence by the Companies Act of 2008 in terms of Section 185, subsection 1 of the Companies Act. The Commission is established as a juristic person to function as an organ of state within the public administration, but as an institution outside the public service. Now, the objectives of CIPC is a registration of companies, cooperatives, and intellectual property rights and maintenance thereof, disclosure of information on its registers, enforcement of relevant legislation, promotion of education and awareness of company and intellectual property law. We also do licensing of business rescue practitioners. We monitor compliance with and contravention of financial reporting standard and making recommendation thereof. And then we also report, research, and advise the Minister of Trade and Industry on matters of national policy relating to company and intellectual property law. Ladies and gentlemen, without a waste of time, I'll now hand over to Mr. Mulaudzi. I thank you.
Mr. Fenyane, for the introduction. My name is Advocate Tikatari Mulaudzi from a unit within the CIPC, Corporate Compliance Disclosure and Regulation. I would like to take this opportunity to thank everyone who's attending or watching this webinar for making time in order to, so that we can impart knowledge of independent reviews as per the Companies Act. Before we can start, there is a link that we have put up on the chat box with regards to a survey that we are conducting within the CIPC with regards to independent reviews. The closing date of that survey is today, the 29th of October 2021 at 4 p.m. So I just want to encourage each and every person who's attending in order to take time to get into the link and respond to the survey. Without further ado, I think let me start. This presentation is about independent reviews. We will note that independent reviews are given rise by the Regulation 29 of the Companies Act 71 of 2008. And the purpose of this presentation today, it is to outline the role and responsibilities of the CIPC as a regulator when it comes to the procedure and reporting requirements of the independent review regime. You will note that this independent review regime came into being with a new act. Next slide, please. The structure of my presentation today is been structured into 5 different points or aspects that I will have to deal with. I will deal with the independent review definition, as in what is meant by independent review. You will note that as per the Act, independent review has been outlined and defined, as in this is what is independent review. And then I will deal with reportable irregularities that are given rise by the performance of an independent review by an independent reviewer. You will note that an independent reviewer, while conducting his or her review, there might be a time where they can pick up a contravention of some sort with regards to any legislation within the Republic. And as such, when that reportable irregularity is identified, there must be a report. So I will deal with the reportable irregularity and the process of it, the reporting process of that reportable irregularity as soon as it is identified, and the role that the CIPC plays in dealing with the reportable irregularities that are given rise by an independent review, and the role of an independent reviewer when it comes to reportable irregularities. And then I will also deal with the report by professional bodies. You'll remember that these bodies are bodies that are listed or that have been recognized by the Companies Act of its professional bodies. Now, what is an independent review? An independent review, it is an alternate assurance engagement where assurance is provided on a set of annual financial statements as opposed to that of a reasonable assurance provided by an auditor as per an audit of annual financial statements. This is you will note that when it comes the difference between an audit and an independent review, I mean, we can put it as simple as the costing. Independent review by its nature has to be less costly, but it has to have that assurance that these financials comply with different legislations within the Republic of South Africa. Next slide, please. So, who is an independent reviewer? Regulation 29, subsection 4 defines as in who is an independent reviewer. It is any person who is referred to in this regulation and who has been appointed to perform an independent review under this regulation. For example, a registered auditor or a member in good standing. I think there must be emphasis on the good standing part of that particular member. There are members who might be a member of a professional body, but for any other reason, they cannot be termed as members in good standing due to some other requirements that they have to comply with. Of a professional body accredited in terms of Section 63 of the Auditing Professions Act. So that means that particular member, either registered auditor or a member in good standing of a professional body that has been accredited. Next slide, please. And what is a reportable irregularity? A reportable irregularity, it means any act or omission committed by any person responsible for the management of a company, which there are 3 aspects that we have to deal with, which unlawfully has caused or is likely to cause material financial loss to the company or to any member, shareholder, creditor, or investor of the company in respect of his or her or its dealings with that entity, or is fraudulent or amounts to theft, or causes or has caused the company to trade under insolvent circumstances. Regulation 29 subsection 4 further states that when should an independent review be carried out? An independent review of a company's financial statements must be carried out in the case of a company whose public interest score or PI score for the particular financial year was at least 100 by a registered auditor or a member in good standing of a professional body that has been accredited in terms of Section 33 of the Auditing Professions Act. Or, next slide, please. In the case of a company whose public interest score for a particular financial year was less than 100, this kind of a review can be conducted by a registered auditor or a member in good standing of a professional body that has been accredited in terms of Section 33 of the Auditing Professions Act, or a person who is qualified to be appointed as an accounting officer of a close corporation in terms of Section 60, subsection 1, 2, and 4 of the Close Corporations Act 1984. Now, I will deal with the process of reporting a reportable irregularity. There are instances whereby a reportable irregularity will be reported to the CIPC. So now this is the process that we have to follow in this regard. So there might be, what might trigger for a reportable irregularity to be reported? When an independent reviewer has reasonable grounds of a reportable irregularity has identified, or has reasonable ground to identify a reportable irregularity, they must send a written report to the CIPC. Now, the next action that must be taken is to send a written report to the board of a reported company within 3 business days, of which a copy of that report must be sent to the CIPC. Copy of the report to CIPC must accompany the notice that is to go to the board. Now, the next action that must be taken is within 20 business days from date of submission of the report to the CIPC, the independent reviewer must discuss the report with members of the board of that particular entity, afford members of the board or that particular company a chance to give feedback on reported issues as per the report. Now, after this has been completed, they must send another report. The independent reviewer must send another report to the CIPC, which has to include the following: that according that the independent reviewer is of the opinion that no RI has or is taking place, or suspected RI is no longer taking place, and steps have been taken to remedy situation where relevant, or RI is continuing, the reportable irregularity is continuing. Detailed particulars and info supporting the above. It cannot be accepted that when a report is sent, if, for instance, let me deal with issues when, for any reason, a company has been reported for contravening Section 22, reckless trading. With that in mind, when it comes to reckless trading, you'll find that maybe for any other reason, the company or the creditors have subordinated its loans towards the company. So you can detail that aspect, that loans have been subordinated by this particular company. Herein, we attach either that agreement, attach the agreement that the loans have been subordinated. Now, let's say that the report is these have been sent through to the CIPC. Now, the CIPC must, as soon as possible, post receipt of report, notify, either we must notify any appropriate regulator in writing of the details of the RI, provide with a copy of report, and may investigate any alleged contravention of the Act. If the CIPC suspect that there's a reasonable belief that there's a contravention of the Act, the CIPC will investigate further. Next slide, please. Now, the role of the CIPC. The role of the CIPC is to notify any appropriate regulator in writing of the details of the RI to which the report relates to and provide it with a copy of the report. These are instances whereby a company has been reported for, we can say, for not paying payee tax. So that means we will know that that matter has to be handled by the South African Revenue Services. So the CIPC will send a report to SARS in order for SARS to take further action or investigate. Or the CIPC may investigate any alleged contravention of the Act. Now, we have a dedicated email address that these reports must be sent through to. The email address is independent-review@cipc.co.za. That means you will send your first report to the CIPC, even the second report, and the CIPC will note those reports. Next slide, please. Now, what is the role of an independent reviewer when it comes to a reportable irregularity? Independent reviewer may carry out such investigation as he or she deems necessary, and in performing any duty referred to in the preceding provisions, the independent reviewer must have regard to all information which comes to his or her knowledge from any source. Next slide, please. Next slide, please. Now, what are the benefits of independent review? The benefits of independent review can be categorized as follows: that it will be more cost-effective to conduct an independent review, more convenient and less burdensome, simpler and less requirements and less rigorous. So the aim of an independent review is to ultimately lower regulatory burden for SMMEs, your small enterprises, to ensure affordability and sustainability for small businesses, hence promoting entrepreneurship. You'll remember that with the new act, there was one aspect, that objective, that it wants to simplify the doing of business within the Republic and to promote your small enterprises. Next slide, please. Next slide, please. Next slide, please. Now, what are the challenges that we are encountering within the CIPC when it comes to adherence of this Regulation 29 when it relates to dealing with issues of reportable irregularities? We have challenges when it comes to failure by independent reviewers to adhere to procedure as set out in Regulation 29. One of these challenges is that second reports are not followed by a first report. There are instances where an independent reviewer will send a first report and doesn't send a second report, whether the matter is continuing or not. Or an independent reviewer only sends a second report and there's no first report as per Regulation 29. And there are also challenges when it comes to an independent reviewer doesn't give an indication whether he or she investigated the reportable irregularity. And still, not many RI reports forthcoming from the independent reviewers. We have seen less independent reviewers, RIs, being reported or coming through. And in this, we sent out a survey in order to identify, as in, do professional bodies or accountants or professionals know of how to handle an RI that emanates from an independent review. Next slide, please. Now, this is we're dealing with the annual report that has to be filed at the CIPC by all professional bodies that all accountants or independent reviewers are or belong to or registered under. So you'll note that all professional bodies incorporated under Section 60 of the Close Corporations Act, number 69 of 1984, whose members are entitled to perform an independent review as contemplated in Sub-Regulation 4B2, must annually file a report with the Commission demonstrating this is what those annual reports must include, or the contents of that report, whether that specific professional body, they've got proper mechanisms in ensuring that its members participate in continued professional development and achievement of professional competence. Next slide, please. Whether it has mechanism to ensure that its members are disciplined where appropriate. It is, and it is likely to continue to be financially and operationally viable for the foreseeable future. It keeps and maintains a proper register of its members. It has in place appropriate programs and structures to ensure that it is actively endeavoring to achieve the objective of being representative of all sectors of the South African population geographically, if it meets any other requirements that may be determined by the Commission from time to time. Next slide, please. Next slide, please. Now, here, these are the statistics that we have gathered since 2015, financial year 2015-2016, up until financial year 2019-2020. You can see the trajectory that we have when it comes to matters being allocated, the upward trend that started from 2015-16 and then up to 2018-19, and then there was a downward trajectory in 2019-2020. And now, most of the matters, or the matters that we've received, we have tried to categorize those specific matters or the specific reportable irregularities. There were issues that were reported regarding liability exceeds assets, whereby a company's liability exceeded its assets, whereby there was financial assistance that was given by the company to one of its directors without following due process, where there was VAT return not declared to SARS and any other matters. So we can see that most reports that we receive mostly about liability exceeds assets and financial assistance. You can see that the numbers reflect to that effect, that these are the two specific matters that we deal with when they're reported by independent reviewers. And you can see when it comes to matters that we have worked on or that have been closed, you can see the upward trend trajectory that happened from 2015-16 up until 2018-19, and then a downward trend. So these are the statistics that we are keeping, and these statistics help us to identify whether is independent review achieving what was meant to achieve. In one of the questions that we had in one of our surveys was whether when a client walks into a specific independent reviewer's office, does an independent reviewer give an option to that specific client to say, your financial statements, I can independent review your financial statements, or do you want to go for an audit? Does that question ever arise in dealing with independent reviews? Next slide, please. Now, this was simplifying those statistics as per the last slide. You can see the numbers that have been going up, the opening balance that we had, the matters that we allocated to specific investigators in order for them to investigate the specific reportable irregularities that we have. Next slide, please. Now, I think it is very imperative for accounting practitioners and or auditors that are involved with the functioning of or in dealing with independent review to familiarize themselves with the process as stated above to the reporting of the reportable irregularities that emanate from the independent review of financial statements. And as only then can there be a smooth, streamlined, and efficient process to ensure that these reportable irregularities are timelessly, correctly reported to the Commission and attended to accordingly. We need, as the CIPC, our role is not only to regulate, but also to promote. So in regulating has to come promote. So we also need to promote compliance with legislation. We also need to promote independent review as much as we promote other aspects. So with independent review, it is to assist your small business enterprises or small medium enterprises in order for them to comply, to have compliance with the legislation, and to professionalize those small enterprises, and also in us formalizing that for those small enterprises to be economical viable, and also to adhere to legislation and to promote their existence and to grow our economy. Next slide, please. Now we have noted that it has been on the news since the year 2020 March that we encountered a pandemic, a global pandemic that has impacted on most your small enterprises. COVID-19, we had tough economic conditions. And it still continues to have impact on our small enterprises, and those small enterprises. We do see on a daily basis that the struggle that they are encountering, most of them, they've closed down businesses. Some of them, the government is trying to assist them in reviving their businesses and in order for them to be economically viable again. And with that, it needs all of us to join hands in order for us to pick up our economy where we left it off, and in order to grow our economy and to promote small enterprises, and to allow those small enterprises to thrive in these current economic conditions that we find ourselves in. With that, I would like to thank everyone who has been part of this webinar. And questions that, if there are any questions, there's a chat that has been provided that you can send a question through, and we'll be more than welcoming to answer those questions. So I would like to thank everyone for this opportunity, for giving us this time to give you this presentation, and to further remind you that there's a survey that we are conducting. We have shared a link on our chat box. If you don't find the link on our chat box, you can also log into our website and you can go and find our survey. We would like to hear from you as professional, as accountants, as professionals who are dealing with independent review, as business owners, as in what is your view when it comes to independent review. This will assist us in order to know as in where are we lacking, where can we improve when it comes to best giving you the best service when it comes to independent review, and to further enhance our capabilities in ensuring that these services are available to you. Thank you very much to everyone. Thank you.
Thank
Colleagues, we have one question up from Raphael. And he says, is it possible to conduct independent reviews on PTYs? My viewpoint is that only CCs are covered. Please clarify.
Thank you. Yes, it is indeed possible to conduct independent reviews on PTYs. The criteria as illustrated by Advocate Mlaudzi, it's relating to the public interest score. You need to comply. The PI score has to be below 350 in order for PTYs to qualify for independent review. As you may be aware, if the public interest score is above 350, then it's mandatory that an audit be done. I hope I've answered your question. Thank you, Rafael.
We do not have any more questions. And with that, we will be closing the webinar. Thank you.
I see a question relating to CPD. Can we address it?
Yes, you can go ahead.
With regard to CPD points, we have not made any arrangements to this regard. So that responsibility, I think, is with the relevant professional bodies. So, yeah. And again, just a reminder as to the relevant notice which contain the survey link. It's notice 48 of 2021. Thank you.
Lorato?
Thank you, colleagues. We have come to the end of our webinar. I thank you all for attending as we close. Thank you.